I think due to Mr. Atula's commitment, we have skipped the employment income session, and you just jump into the business income. And first 2 days, I have discussed with you whatever the introduction and charging section and other relevant areas together with the documents. Okay. Then today, you have received 2 documents. One is PowerPoint presentation, other one is one question to do as a calculation. Actually, I was unable to share that document daytime and yesterday also because these days I am also too much busy with my higher education also. Doesn't matter. Then let me share the document with you and let's go with the subject quickly. Right, you can see my screen. On the screen now we have employment income, right? As we well aware, as I told you, second day, as per the Inland Revenue Act number 10 of 2006, we had around 14 sources of income. But as per the Inland Revenue Act number 24 of 2017, we have only 4 income sources: employment, business, investment, and other. And also, we have, as per the current Inland Revenue Act, we have to tax income by applying the dominant principle or dominant rule. What is the meaning of that? What is the meaning of that dominant principle? Yes? What is the meaning of that? Yes, yes. You need to talk.
The main income out of all 4.
Pardon?
The main income, the highest income category. For example, if you have employment and business, out of the 2, highest income is coming from employment.
Somewhat close, but not the perfect answer. Anyone? Yes, yes. Can anyone discuss about that? The dominant principle means we have order, right? What is the order? First income source is employment. If the income is relevant to the employment, first you have to check whether it is employment income. If you have any income, you have to consider whether it is employment. If not, you have to go to the second one. What is the second one?
Business income.
Business income. Then if not employment or business, then you have to go to the investment income, right? Investment income. Since you have discussed the business income, it is easy for me to discuss some areas together with you with the employment income. Now, that is the dominant principle. First income source is employment, then business, then investment, then other. But in a practical scenario, under other sources of income, we don't have income sources to categorize, because whatever the income sources available may cover under employment, business, or the investment income, right? Is it clear? Is it clear?
Clear.
If anyone asks the question about the what is dominant rule or dominant principle in current tax, that is the rule, right? Then when it's come to the assessable income, you know, we have a resident, non-resident principle. We have discussed them. Very important point here is when we consider the 2025-26 scenario regarding employment income also, we have some specific areas to be considered. Within the session, you will realize. After that, we will touch that area with the example next day, right? Then, you know, if it is resident, we have to apply the resident principle. If it is non-resident, we have to apply the source principle. Is it clear? Resident principle and source principle. Is it clear? Yes, yes. You can openly discuss anything. No issue with Mr. Atul or myself, right? What is resident principle? If anyone resident in Sri Lanka, we have to tax his global income in Sri Lanka. His global income in Sri Lanka. If it is non-resident, we can tax only the income received from Sri Lanka. From our territorial boundaries, whatever arise or derived, we can tax. Is it clear now?
Yes, excuse me.
Yeah.
Will you just explain the real meaning of arise or derived?
It is English, I think. Rise means whatever the income raised from Sri Lanka.
Yeah.
Then derived means also in singular
Getting from
wording.
something, no?
Yeah.
Getting from something.
Yeah.
Right.
Okay.
Okay.
Thank you. Someone actually asked the questions. Huh? Right. Good. Then you are clear. And here I will touch some somewhat international tax scenario also here. When we discuss about the resident, non-resident, because if any individual having any income from outside Sri Lanka, then sometime those income may be taxed at the other countries also, right? At the other countries also. Therefore, you know, especially regarding non-resident, even companies, we have to apply domestic law together with the double tax avoidance agreements. Right? Together with the double tax avoidance agreements. We have double tax avoidance agreement with the rest of the world. Some of the agreement are comprehensive agreement. Some of the agreement are limited agreement. You can go to the Inland Revenue website and you can check what are the comprehensive agreement and what are the limited agreements. I think you also can propose in the CMA Silver Jubilee. Professor Watavala and myself discuss with Atul also regarding starting transfer pricing and international tax program also. I think you may interest on that also. Right, we'll see. Then, you know, methods of accounting in taxation. Employment income should be taxed on cash basis. What is the relevant section? Section 21. Section 21. I will open the Inland Revenue Act also for your betterment. We have consolidated version of the Inland Revenue Act. You can see my screen, isn't it?
Yes, can see.
Can see. Then let's quickly move to the section 21. Right? You can see here. Method of accounting. Unless otherwise provided by this act, the timing method of inclusions and deductions in calculating a person's income shall be made according to the generally accepted accounting principles. What is the meaning of that? Generally accepted accounting principles means currently IFRS, right? IFRS. However, subsection 2 says that an individual shall account for income tax purpose on a cash basis in calculating the individual's income from an employment or investment. See the wording? An individual shall account, right? Shall account. Either, no, either, right? Shall account. Then an individual or entity conducting business shall account for income tax purpose on accrual basis, right? And you can see here, employment should be accounted on cash basis. Investment, again can cash basis. Business, accrual basis. 4, a person shall account for income tax purpose the income from sources other than the sources referred to in subsection 2 and 3 on either or cash or accrual basis. Whichever properly computes the person's income. You can see here 2 says about the individual's income from an employment or investment regarding individual, right? Regarding individual. 3 also, subsection 3 also regarding individual, right? Then 4 is relating to the person. Other than individual also covered, right? This is the scenario. Therefore, you can see in my presentation I have put employment cash basis, business accrual basis, investment, either cash or accrual. To whom cash is applicable? Individual. Individuals. Others, accrual basis. Right? Other income also same scenario. Right. Then you know, accepted accounting standard means we have IFRS. In international scenario, we have Sri Lanka Financial Reporting Standard, SLFRS. Under that, we have 3 scenarios. That is full IFRS or full SLFRS in Sri Lankan scenario, SLFRS for SME and SLFRS for small entities, right? But before that, in a taxation, another section deal with the accounting, that is section 120. 120 subsection 2 says that mandatory legal requirement for tax agent to act as approved accountant on preparation of income from business or investment, and also to attest the accuracy and completeness of accounts prepared for tax purpose. Let's go to the that scenario also quickly, section 120. You can see here, chapter 10, record keeping and information collection. A taxpayer engaged in business or investment activity or required under this act to make a return shall keep and maintain in Sri Lanka records and accounts sufficient to record all transactions and to ascertain the gains and profit made or the loss incurred in respect of those transactions. With the amendment with effect from the year of assessment commencing from April 1st, 2021, where any person is engaged in business or investment activity and the income tax payable shall be calculated by applying different tax rates for such part of taxable income from any gains and profits from business or investment activity or may have exempted amount as the case may be. Such person shall maintain and prepare the financial statement or separately identified such part of taxable income from gains and profit in applying each income tax rate to each part of the taxable income or to identify the exempted gain and profit. You know, in the previous Inland Revenue Act, we have section 106.11. 106.11, if any income taxable at different rates or any income exempt from tax, therefore, they have to maintain separate accounts. That is the rule. And also proviso there with the 2022 amendment. Provided, however, that is the proviso, in the case where such person has commonly incurred expenses or commonly use any asset on all business or investment activities and any expense or deduction cannot be separately identified for the purpose of this subsection, it shall be lawful to divide such expenses or deduction on a proportionate basis in preparing such financial statement. You know, previously we had export separate rate, other concession rate categories was there, and normal rate either 24 or 28. Currently, we have regarding company, we have 30% as common rate, but however, you know, still we have some companies which are enjoying tax benefit under, can you complete balance part? Rate benefit or tax benefit under which law? Concessionary rate under which law?
BUI.
BUI, definitely BUI. Therefore, there are businesses having that scenario. Therefore, you can see more practical application available with the section 120 subsection 1, which is amended with the Act number 45 of 2022. It provides the room for businesses to maintain proportionate base accounting. Proportionate base accounting. Is it clear? Is it clear?
Yes.
In a practical scenario, you know, if the same business having normal rate applicable business income and lower rate applicable business income or exempt income, they do not prepare separate accounts. They do not prepare separate accounts and do not sign the auditors. Then most of the businesses follow the rule, which is proportionate basis. Okay. And within bracket, you can see here, according to the proportion of turnover or proportion of asset usage. This is the scenario. How to allocate the cost? There are two methods. One is based on the turnover. Other one is based on the asset usage. Especially bank and financial sector, there are some kind of the scenarios regarding recognition of expenses, recognition of income, which are subject to tax, which are exempt. Then sometimes we have to consider not the turnover, but the asset. Clear? Is it clear?
Yeah.
Subsection 2, the circumstances under which a person engaged in business or investment activity shall have accounts prepared by an approved accountant. See the wording. The circumstances under which a person engaged in business or investment activity shall have accounts prepared by an approved accountant, and the form by which an approved accountant shall attest to the accuracy and completeness of the accounts prepared shall be prescribed by regulation. That means, as Commissioner General prescribed by regulation, they have to maintain and they have to attest where the accounts are accurate and complete. Okay, accounts are accurate and complete. The wording here, approved accountant. Who is approved accountant? We'll see. And subsection 3 says that where the Commissioner General is of the opinion that proper records or books of accounts are not being kept in accordance with the subsection 1 or 2, or where no records or books of accounts are being kept by any person carrying on a business, then in addition to a prosecution for an offense, the Commissioner General may direct such person to keep such records or books of accounts as the Commissioner General may specify. See the section 120 subsection 3 is how powerful. And subsection 4, the records or books of accounts required by this section shall be kept at the place of business or investment activity of the person unless the Commissioner General approves of them being kept at some other place. According to this, before doing archive, you have to take the approval from the Commissioner General, right? Am I correct? The records or books of accounts required by this section shall be kept at the place of business or investment activity of the person unless the Commissioner General approves of them being kept at some other place. මීට කලින් මේක ටච් කරාද කට්ටිය? Yes?
No.
No. දැන් මේ ඇක්ට් එක කියවන්නත් මම මේ කියලා දෙන්නේ, right? See the things. I want to enlighten you, right? I can open your eyes. 5. In addition to the records and accounts referred to in this subsection 1 and 2, a taxpayer shall also retain source document and underlying documentation utilized in the creation of the records and accounts. See the act, how powerful. You have to maintain whatever the root document, right? Whatever the root document. Subsection 6, a person required to prepare or retain records of a transaction under this act shall retain such records for a period of 5 years from the date on which the transaction took place. For a period exceeding 5 years until expiration of the time limit for assessment of tax for any tax period to which the records are relevant and until any related proceedings have been completed. If any case is in court proceedings, then subsection 6, paragraph B also applicable, right? See this section how long? 7, notwithstanding anything in any law, the Commissioner General may specify a system of simplified record keeping for small business. See the wordings. Regarding small business, even though we have SLFRS for small entities, Commissioner General also can give the guidance how to prepare accounts, how to keep recordings. 8, where a person has prepared records required under this section in a language other than Sinhala, Tamil or English, that person shall at that person's expense upon request provide a translation acceptable to the Commissioner General. See the language policy has been maintained here. Sinhala, Tamil or English is accepted. Other than those 3 languages, then accounts should be prepared by applying subsection 8 of the 120, that means whatever the translation should be, either Sinhala, Tamil or English, whichever Commissioner General accept. 9, subsection 9, financial statement, invoices, books of original entry, and all written communications between the department and the taxpayer shall be in Sinhala, Tamil or English, with amounts and values to be provided in Sri Lankan currency as well. See, basic things are available regarding accounting also, right? Tax purpose accounting. Subsection 10, for the purpose of this section, source documents include sales and purchase invoices, costing documents, bookings, diaries, purchase orders, delivery notes, bank statements, contracts, and other documents which related to an element of a transaction. See, last one is a broader one. Other documents which related to an element of a transaction. How is feeling about 120? Yes.
It's very comprehensive.
Frankly, you can give your views now. Yes, Mr. Jayakodi?
I said it's very comprehensive and covered like most of the areas. Like, I mean, there's no room to escape.
Definitely. Because why that is available here is, if you remember the section 13 up to some extent, okay, section 13, when I read this at first time, section 30, when I'm reading section 13, I was confused. I thought that why these basic things discussed in this act? Actually, although people say in this Ghana model or whatever, this is IMF model, right? This is IMF model where it is excised at the beginning is Ghana. Okay, we have our model with the combination of that IMF and our previous laws and like that. You know, with the, as I told you, eras. Yahapalana is the era where this act is introduced. Then we have Saubhagya Dakma, totally included the some sections available in the previous Inland Revenue Act. Then we have after economic crisis period. Again, we went to the original act, but with more restriction. And now we have Osat Ratak Lassana Jeevithayak as Finance Minister President highlighted at the Japan. He is not going to do big changes in taxation with this budget. My personal feeling, even today with my higher study supervisor, we discussed, he also economist. Our view is no one can deviate from the track what is given by the IMF and World Bank, which followed by the Ranil Wickremesinghe. Do you agree with me? Do you agree with me?
Yes.
Definitely you have to agree with me, because that is the reality. If anyone play havoc, again we can expect another crisis. I am telling not as the tax person, I am telling as the economist. That is my feeling. As I told you, in our history, first time we had internal shock and external shock in the Saubhagya Dakma period. Internal shock with the tax cut, external shock with the keeping exchange rate at the control level, 200, around 200, 195 to 200. No? Am I correct? Right. But my personal feeling, see, this law is much powerful. I think Mr. Atula has touched the, already started the administration part or not?
Not yet.
Not yet, right. With that, you can learn more. I think this is relevant to the administration also, but I thought that it is my duty to discuss this part. How is feeling about this part?
I think it's a very important sector.
Yeah. But you have not touched, I think.
Exactly.
Yes.
Very simple things, but are very important.
Yes, very good, very good. That is why I touch that place, because your duty, that is what I want to tell you. During the 4 sessions, whatever available with me, I will try my best to give you the knowledge, but it is your duty to go through with the relevant section which I have mentioned in my PowerPoint presentation. Okay. Now you can see how I am using the 3 documents together, right? Always I am asking, all of you are my friends, right? Some of you older than me, some of you in my same age, some of you younger than me, doesn't matter. But it is my duty, without keeping anything as height, to share with the knowledge. No, that is my way. Okay. Therefore, yes,
small question.
definitely.
Say now, after specifying this now, if a person has agriculture income where there is regular income, right, from a small piece of land, let's say 5 acres or 1 or 2 acres, but their regular income, will that be considered as business income, and then it has to be submitted by an accountant, qualified accountant?
Yes, very good question.
Because there's regular income. Let's say there is
Yes,
coconut
yes.
income regularly.
Coconut
right?
income, yes.
But it's a small land.
Okay.
Let's say 5 acres or whatever, right? And then you have to prepare accounts, keep records, and then submitted through an qualified accountant.
As per the small entity scenario, if we can apply that, that requirement is not applicable. But if it is more than that, you have to go to the application of the real situation, providing the certification by the approved accountant.
Raman, is there any turnover limit to decide that? I can remember as if someone
Previously in the Inland Revenue Act itself, we had the SME, small
500
entity SME, yeah, 300 was there, 500 was there, later it has increased to 700. Do you remember?
Yeah.
Like that. But in this act, I was unable to find that categorization.
How are we going to decide whether to keep accounts by chartered accountant or audited accounts or not?
I think it should be done on the judgmental basis. We'll see. I will check with the practical application scenario. Okay, for example, here 7. This is the applicable subsection. No? Notwithstanding anything in any law, the Commissioner General may specify a system of simplified record keeping for small businesses. Okay, because Commissioner General should specify, no.
Yeah.
Okay, not the wording should, may. You know, under section 133 also same rule available, no. Okay.
The thing is, Sri Lanka is full
not
of...
the 100 section 33, right? Section 33 also having Commissioner General may specify. Okay. Then it is not mandatory. Not mandatory. Then what is the substance or form we can consider? Because you can see this section started with what? A taxpayer engaged in business or investment activity or required under this act to make a return shall keep and maintain in Sri Lanka records and accounts sufficient to record all transactions and to ascertain the gains and profit made or the loss incurred in respect of those transactions. How to do that is discussed. Okay.
Issue is certification, no?
Yes.
But I think for listed companies, it's a must to have a chartered accountant, no? It has to be audited, no?
Yeah, go to the subsection 2. The circumstances under which a person engaged in business or investment activity shall have accounts prepared by an approved accountant. There is no limit, right? If anyone engaged in the business or investment activity shall have accounts prepared by an approved accountant, and the form by which an approved accountant shall attest to the accuracy and the completeness of the accounts prepared shall be prescribed by regulation. Again, prescribed by regulation. Then this regulation discussed in here also, subsection 7, where the Commissioner General should prescribe. If it is not prescribed, then there is a question. There is a question. Because regarding this, we'll see the gazette is issued or not. Whether any gazette is issued, that is a question. If you check Inland Revenue website, gazettes from 2018-19, right? You have to check what are the gazettes available, right? First on here, you can see stamp duty regulation transfer pricing, stamped VAT, published under Inland Revenue Act. You have to check that one. This is the way you have to go through, right? During this weekend, try to check. Okay, let's take this as a homework. Are you okay? Because otherwise I have to discuss with you other than the employment income, accounting treatment, right? 18 you have to check, then 19 you have to check, 20 check only the act relevant to the Inland Revenue Act. Sorry, gazette which are relevant to the Inland Revenue Act. Then you will realize if it is there. Okay. And also you can see here the relevant sections are there. 86.7, 145, 123.8. Likewise, we have no. Because I am the person introduced this practical application courses to the industry, where we started VAT courses at the Taxation Institute at the beginning. That is the course we are continuing with you, CMA now. Okay. We started it as a practical course, okay. Practical application side. Now you can see there are so many institutions conducting those courses, right? Then please try to do that. Okay. Try to do that. And also, since I am in the Inland Revenue website, since we are in the employment income discussion today, did you submit your individual income tax return?
Yes,
Already submitted, no?
today.
Today, right? This time, I think most of the people utilize the who are the people using simplified return. They try to submit the return together with the final payment. That interest is there. I want to show you one guide here. This is the guide uploaded with the return prepared by Secretariat Unit. And also, we have another guide. Did you follow this? Yes? Did you check this? No. Did you check this or not? Yes, my friends. Whether this you use this. This has been prepared by my unit, and we have done this. Okay. We have made this as a simple guideline to submit the returns. Okay. Whoever not submitted return, then you can ask them to follow this document to submit the return, not only simplified return, but also standard return. Okay. You can see even we have given all the component and with the relevant cages, how to do them, and with guidance. Okay. Right. Now let's move to the subject again. Is it okay? Everyone?
Can you please show us where's the definition for approved accountant?
Yes, we'll check that one. How to get that? There is also one question.
Interpretation sector.
Yeah, very good answer. You can use Control F and type what? Approved
Accountant.
Yeah. We have 5 places. One is which we have discussed already, approved accountant. Second place in the same. Third place, same section or other section. Same 126 tax return. Return filing also dealing with the approved accountant. Where a written no part, this part also should be discussed by myself. Where a written no part of return was prepared for reward by some other person, including by an approved accountant other than a full-time employee of the taxpayer, that other person shall also sign the return. You know, in the income tax return, part 1, part A and part B we have. First part should be signed by not the taxpayer, but the person who prepare the accounts for reward. For reward. Right? That is why I told you section 120 is very much important. Who prepare tax account like a doctor. Like a doctor. What is the meaning of that? Taxpayer like a patient. Then, what is the meaning of that? Patient should disclose everything to doctor. That is the requirement. That is the transparency. What is expected by law. Right? However, you know, we have some amendments to that to deviate from that, because you know, in the accounting and auditing scenario, although auditor signed the audited accounts, auditor having room to disclose whatever auditor notice and whatever auditor unknown. Even in audited accounts, auditor can provide the qualification. But in a taxation, we don't have such a provision. That is why I am telling you, right? With here you can see where repeal and substitute the new section, where a return or part of return was prepared for a payment by any person. See, the reward has been changed as the payment by any person, including by an approved accountant. Such person shall certify separately, specifying the extent to which he was involved in the preparation of such return and specify the documents examined by him and the information relied upon by him. Such certification shall be submitted along with the return, and the said certification shall be deemed to be part and parcel of the said return. What was done? මොකද්ද මේ කරලා තියෙන්නේ? ඇත්තටම මොකද්ද මේ කරලා තියෙන්නේ? I think you know there are so many chartered accountants also in our cluster. One case has been filed neither. Am I correct? Because taxpayers are not disclosing everything to the tax consultant or tax auditor. Therefore, to protect their profession, amendment has been made similar to the accounting. Now, auditor or approved accountant or whoever doing tax accounting in a cool zone. How the cool zone has been prepared, you can see here, there is a limitation. What is the limitation? He is giving his consent only on the areas that he discovered. Whatever undisclosed by the taxpayer within himself. Okay? Did you understand what I am telling? Now, similar to the audit. And also, you know, when preparing audited accounts and when doing the audit, relevant client and auditor share some documents. What are they? Agreement. I think you know more than me. Yes? Audit offer letter, audit engagement letter. What are the others?
Letter of engagement, no?
Yeah, those are available. When you offer taxation duty to the tax consultant, whether any letter is prepared, whether any agreement is available, as per the law, whether it is needed. As per the previous law, we did not have any requirement. But as per the current law, up to some extent, it has been maintained, no? The role of the tax agent not monitored in Sri Lanka. But through this section, there was a clue to monitor the tax agents. However, again, section has been provided more liberal rule for tax agent to protect their profession. Am I correct? Whether my analysis is correct? Since our taxpayers are, yes, since our taxpayers are transparent or not? Yes?
Most
That
are
is the
not.
question. That is the question. That is the question. Right? That is why I am going to do a study on that area. Right? I think you can see my screen. Okay. How taxpayers' behavior depend on these things. Even tax agents' behavior influence on taxpayers' behavior. Am I correct? Ultimately, it may be to tax evasion. Right? Okay. Are you happy with the way that we went on that section? But not provide the real answer for the question, no? Still. We are in the third approved accountant. Where is the last one? It is available in the section 195, general interpretation section. It contains approved accountant means an accountant who is member of the Institute of Chartered Accountants of Sri Lanka, or an accountant who is fellow member of Association of Accounting Technicians of Sri Lanka, incorporated under the Companies Act number 7 of 2007, that is AAT, no?
Yes.
In relation to any person or any partnership other than a company. You can see limitation is there. AAT members can sign the audited accounts only
Individual and partnerships.
Yeah, individual and partnership other than the company. Where turnover limit also there, 100 million. 100 millions. 100 million. Okay. There are two categories only. Right? I think CMA should take a professor talk with me. Since the similar capacity available, at least we can put CMA also into this level, no? AAT.
Even the members of Chartered Institute of Taxation can be included, isn't it?
No, because approved accountant now they can try, because when prepare the new syllabus, we have give more priority for the accounting side. Other than that, there was no accounts, there was no auditing. Okay, what is the current curriculum? Damit and myself developed that one. Even though we are not there now, we were in the committee. Damit was the chairman, I was the alternative chairman. We developed the curriculum, but it is not presented by ourselves. It has been done by some other people. Like we are the fathers of the document, but the document has been submitted as the other people as fathers, right? In the current scenario, they can try to up to that level. If it is not covered under approved accountant, but it is covered under the authorized representative. Right? There are two categories here: approved accountant and authorized representative. Okay?
Yeah, thank you.
Since the issue is discussed here, 115 discuss about the authorized representative. The Commissioner General may specify the circumstances under which a taxpayer may designate an authorized representative to communicate with the department on behalf of the taxpayer and shall accept a designation made in accordance with such circumstances. Then that is what available. Okay. An authorized representative should be gazetted then. And previous act we had the definition, but in the current act we don't have that definition. For remis purpose we have issued the gazette. In that gazette, okay, in that gazette, since this discussion is very much important for you, I will show that part also. You can see here, premise purpose, we have issued the gazette. In that gazette, we have tax agent. Tax agent means an agent who is appointed by the taxpayer to interact with the Commissioner General on behalf of such taxpayer to prepare returns and schedules in respect of any type of taxes administered by Commissioner General for the purpose of e-service, being an agent who is an authorized representative defined in the section 217. 217 means which act? Previous Inland Revenue Act. Attorney at law, chartered accountant, member of the Sri Lanka Institute of Taxation, and registered auditor. Is it clear now? Yes?
Yes.
Actually, very good question, I think, for everyone. Whatever we have discussed is very much important, right? What I want to show you is, you have to go here and there in the act in easy manner, like I am going here and there, because I am also not the tax person at the beginning, right? Practicing, you can improve yourself, right? Now you know section 120, 126 also we discuss, right? With that, you will move to the, I discussed this part previously, process of income tax computation. Now let's move to the employment income. In an employment income scenario, section 195 subsection 1 discuss about the employment definition. Then gains and profit from employment section 5 subsection 2, amounts excluded from employment income section 5 subsection 3, aggregate relief for employment. Previously we had 700,000 additional relief for employment, but currently not available. That is dealing with the section 52. Withholding tax by employers, section 83. Obligation of employer, section 86 and 87, that is also withholding tax. As withholding agent, what is the duty of the employer? Discuss under section 86 and 87. I think I have shared that document, withholding obligation, that day. Previously we met last day. An application of tax rate, first schedule. Exemption in third schedule. Taxation of retirement benefit, again first schedule. Other related provisions. I have made them as a single document here. As per the section 195, employment is defined as a position of an individual in the employee of another person. The meaning of that is, there is an employer, there is an employee, there is an agreement called employee-employee relationship. As per the employment agreement, employee agreed to provide service to employer. For that service, employer give the benefits. That is the big picture you have to keep in your mind. Employer in top, employee in down. There is agreement. Employee agreed to provide service with the arrow. Then employee provide benefits. In addition to that, employee getting benefit from third parties also. Am I correct? As a result of the employment agreement, employee getting benefit from third party also. Very good example is a room boy in a hotel. Room boy in a hotel. Employer pays salary and other allowances and other things. But third party people pay what kind of thing? To
Tips.
room boy. Tips.
Service
Very good.
charge.
Tips. Very good. Tips. Very clear. Right? Good. Then second category.
Even service charges in the hotel sector is applicable for this. Is it other than the employment income, or like how it is going on?
It should be recognized as employment income because they invoice it to the customer, no? Service charge. On the other hand, it is treated as the share of the employment income, employee's income. For what purpose? There was some assessment from the IRD side for the hoteliers by charging VAT on that service fee. Right? Since it is collected from the customers. Even though it is shared with the employees, they have an argument on that.
So finally, as it goes to the employee, is the
Yeah.
company liable for VAT on that?
Yeah, that was the argument.
Ah.
I think that case has not yet been decided. But some people agreed, some people not. There are cases, I think, in the short level. Bad cases. Right? Your questions are welcome. Huh? Then second category, a position of an individual as manager of an entity. Any manager. You know, those are hired people. They are paid salary and remuneration. Third category, a position of an individual entitling the individuals to a fixed or ascertainable remuneration in respect of service performed. Sometimes there may not be an employment agreement, but substance or form available is entitling the individuals to a fixed or ascertainable remuneration. Right? Then fourth category, a public office held by an individual. Very good example is me. I'm a public officer. I'm an individual, represent the public office. Okay. Then a position of an individual to whom any payment is made or due by or from an employer or who receives any other benefit as employee or in a similar capacity. Again, there may not be employment agreement, maybe agreement or whatever. Any payment is made or due by or from an employer or who receives any other benefit as an employee or in a similar capacity. Next category, a position as a corporation or company director, government corporation or company director. When it's come to the director category, you know, there are two categories of directors. Who are they? Executive and non-executive. Managing director represent which category?
Executive.
Executive. Why we consider managing director as executive?
Because he takes the business decisions.
Okay. Is it the only the reason? Yes, yes. If we take the employment scenario, that is not the answer. Whether managing director working in the business itself, whether managing director fully involved with the business activity?
Yes.
Yes.
It's
Therefore,
already the responsibility.
definitely get the responsibility. What about the managing director's remuneration? Is it salary and other benefits or director fee?
Salary.
Salary. Is coming under the payroll, no? Payroll of the business is entitled for EPF, ETF, similar to the other employees. Okay. But other directors, they participate only for the director board meetings to take the decision. Sometimes those decisions are very important decision of the organization. They are getting director fee. Director fee. Am I correct? Any argument? Any mismatches? Yes. Are you agree with me? You are representing the private sector. Most of you are from the private sector. You are holding the positions in the higher capacity. Yes.
Agree with you.
Yeah, good. And also, as I told you at the beginning, last item is the item that I love very much. Last item is the item in the employment income category I love very much. Why? It covers all three periods: past, present, and prospective employment. Employment income includes a past, present, or prospective employment. If it is past, let's take present. When you are working, you are getting the present income. Past income for what? You have served for any organization. Therefore, organization pay or make payment for your past service. In private sector, you are getting retirement benefit on the retirement date. In some private sector organization, we have pension. Most of them are not pay pension, but government sector, we have pension also. Then what is prospective employment? What is prospective employment? Yes, it is for future employment. It is for the future employment. Are you getting any income for future employment? Yes. In a practical scenario,
Yes, it can be.
Can be, no?
Yes.
Yes. Sometime, if any employee plan to leave one office, plan to leave one office, there may be some other parties who is waiting to take him. Then one may ask to join after retirement. Then other one also interest on his capacity. They may ask to give the resignation 3 months prior to the expected dates, and from the letter submitted to the relevant organization, they agreed to pay some additional payment for the 3 months period until he joined with the relevant organization. This kind of payment can be recognized as prospective employment. Are you okay with the example I have explained?
Can you elaborate a bit, because I'm a little bit confused. As you said, the employment income will be taxed under cash basis,
Okay.
but since this is a prospective, is something for future. So like I'm a little bit struggling to understand. Thank you.
Yes. Then definitely whatever received in the current scenario, but he is expecting to join after 3 months, right? After 3 months. But to keep him with them as an agreement, they will pay some amount for the 3 months period until he leave the current office, although he is not working with the new office. Okay, he is getting that income for his future employment. Are you okay with now?
That means the prospective employer is securing him, right?
Maybe, yes, maybe securing him, definitely. But he is getting that income not for the past or present employment. Am I correct? That is the point. He's getting that income. He's expecting to join from the January 1st. From the January 1st. He gave the resignation to the current employer. Okay. I'm going to leave the office from the January 1st or 31st December, and letter has been submitted 2 days back. That means 1st October. Then 3 months condition is available in the most of the private sector, you know. Then he has obliged with that scenario also. Then his obligation also, okay. Then for this 3 months, to keep him as allocated for their office, they pay something. That is in the hands of the recipient employment income. But that employment income is received as prospective employment income. I think now it is clear.
Yes, thank you.
Good. I think when you talk about the business income, similar wordings available, but somewhat in a different manner. That part also I love. Why? If you remember, accepting the restriction to capacity to the conduct the business. එහෙම එකක් කතා කරාද? When you talk about the business income, accepting the restriction to conduct the restriction to capacity to conduct the business. In investment also we have accepting the restriction to capacity to conduct the investment.
Yes, we discussed. Yes.
Similar scenario. See how how legislator thought about that. Okay. All the areas has been covered. All the areas has been covered. Here, prospective employment, in that scenario, sometime someone going to start a restaurant in a one city. Already, one person is running a restaurant. He got to know that newcomer is coming to the market. Then what will happen? His market will be divided. Therefore, he asked that person to not to come for the relevant, some kind of the agreed period. 2 years or 3 years or 5 years. And he pays some kind of the compensation to that person, and recipient should consider it as an income. Who is the party paying can claim it as an expense. But if it is a capital nature payment, it should be recognized on accrual basis. If the 5 million paid for 5 years, only 1 million can be considered as expense for the paying party. Recipient also should be recognized it as a income, only 1 million, because accrued basis. Right? I think it is clear, very much clear. In the investment also same. Good. Then we know employment income, and we discuss here what are the benefits. Benefits. According to the type of benefit received, we can categorize them as cash and non-cash. According to the types or nature of the receipt, we can categorize employment income as cash and non-cash. On the other hand, we can categorize them as regular benefit or continuous benefit and retirement benefit. Retirement benefit, continuous benefit or retirement benefit. Right? Then we'll see what are the items available here, and let's try to categorize them in which category? Salary. Which category? Regular cash. Regular cash benefit. Wages. Yes. Leave pay, overtime, fees. Regular cash. What about pension? What about pension? Yes, I need answer for that. Yes. Although pension paid after retirement, it is regular because it is received monthly. Regular benefit, cash. Commission cash, regular. Gratuities, retirement cash. Bonus, regular cash. And other similar payments may be cash or non-cash. Okay. Then personal allowance, including any cost of living, subsistence, rent, entertainment, or travel allowance. All the allowance has been covered. Discharge or reimbursement of expenses incurred by the individual or an associate of the individual. Discharge or reimbursement. Discharge means employer discharge the expense of the employee or family members, or reimburse. Can you give me some example for discharge or reimbursement of expenses which are done by employers?
Like medical expenditure, fuel expenditure.
Yes, medical. In some cases, school fee also reimbursed by employer. Now I have one question. Reimbursement. Whether all the reimbursement assume traveling expenses reimbursed, reimbursement of traveling. Whether we have to consider all the traveling expenses reimbursement as employment income.
No.
No. Why?
If a part of that or the whole amount is spent on behalf of the company or the production, then that is not liable.
Very good, very good. That means reimbursement of traveling expense may contain official traveling and private traveling. Am I correct?
Yes.
Only private traveling can be considered as employment income. Therefore, not only traveling, whatever the reimbursement of expenses available before tax them, we have to consider what is the expense, and also who is getting benefit. If the benefit with the employee, that reimbursement should be considered as employment income. If the benefit with the employer, it should be considered as benefit of employer, should not tax with the employee. Is it clear?
Yes.
Good. Then next category, payment for the individual's agreement to conditions of employment. Whatever paid through the agreement, we have to consider as income. Payment for redundancy or loss or termination of employment. Whatever the compensation or anything paid as the loss of office or termination of office or redundancy of office, like that. Then retirement contribution made to a retirement fund or fund on behalf of the employee, and retirement payment received in respect of the employee. EPF, ETF, especially coming under these categories. In some private sector companies, especially banks, having pension schemes, separate gratuity funds also, in addition to the normal gratuity funds, like that. Saving schemes available in the banks, like that. Employer contribute on behalf of the employee, then you have to consider them. Right? Then payments or transfers to another person for the benefit of the individual, so an associate person of the individual. Employer make the payment or transfer to another person. Can you give me some example for that?
Giving house rent.
Good. Giving house rent. Yes. Any other? Payment of insurance. Payment of school fees of the children. Am I correct?
Correct.
Payment of medical bills. Not only the employee, but also family members, like that. Then the fair market value of benefit received or derived by virtue of employment by an individual or an associate person of the individual. Whatever the market value of the benefit received, most of the scenarios which received in non-cash, not the cash, we have to consider them. Then other payments, including gifts. See, in the previous act regarding gifts, there were argument. Right? Even gift. Then other amounts required to be included under this act. ඔක්කොම කියලා ඉවර වෙලා other payments including gifts කියලා තව එකක්. Other amounts required to be included under this act. That means whatever miss, we have to consider them also. And last one, the market value of shares at the time allotted under an employee share scheme, including shares allotted as a result of the exercise of an option or right to acquire the shares, excluding the employee's contribution for such shares. Means employer given the option to employee to accept the shares either free of charge or either concession rate. If it is free of charge, open market value at the date of allotment, we have to consider as the benefit from the employment. Right? Then if the employee paid something, it is not employment income. Whatever the free part received from the employer is benefit. Okay? Right. Before moving to the exempt income, now let's go to the question. I'm going to give you a homework. right? Right. Before that, we go with that presentation before because we have to do balance part up to some extent. Right? What are the excluded items from the employment income? Exempt amounts and final withholding payments. We have to exclude them. But in employment income, we don't have any final withholding payments.
So can you give some examples of final withholding payments?
In the current scenario, we have final withholding payments. One is winning from lottery. If the lottery winning is less than 500,000, it is exempt. If it is more than 500,000, 14% withholding tax should be charged by the withholding agent. Withholding getting only 86%. Okay. Then we consider winning from lottery as final withholding payment with the rationale. What is the rationale? Very good example for final withholding payment is winning from lottery, betting or gambling. You know, it is not the regular income. Am I correct? Yes. Okay. What is the rationale? It is not the regular income, no? Charging withholding tax is enough. Another final withholding payment is dividend. In the current scenario, we have dividend, 15% withholding tax deducted by the company who issue the dividend is final for the recipient. Okay. We need not make payment on that as tax payment again. Those are the very good examples. Is it okay now? Are you satisfied with the answer?
Yeah, okay, sir.
Okay. Right. Then a discharge or reimbursement of expenses incurred by the individual on behalf of the employer. Already we discussed. Official traveling is a very good example for that. I told you. Similar to that. Whatever relevant to the officials.
So sorry, on the previous one, withholding payments for
Pardon?
rent, if the withholding payment has
no,
been
it is
done.
not the final withholding payment. As per the original act, interest, 5% withholding tax considered as final withholding payment, but currently not.
Rent, no. Rent, if
I
there's
think
withholding.
what is the document I shared with you in the documents I shared with you very first day.
Yeah, okay.
I have given the withholding applicable for the period prior to after 1st January 2023 to 31st March 2025 separately, and the rates, withholding rates from the 1st April 2025 onwards. And also within bracket, I put the final withholding payment for both scenarios, winning from lottery and dividend. Okay.
Okay.
Others are not the final withholding payment. For example, APIT charge on employment, not the final withholding tax. 5% or 10% with interest, withholding tax charge on interest, not the final withholding tax. Likewise. Okay. Clear, no?
Yes.
Yeah.
Right. Then other item to be excluded is a discharge or reimbursement of an individual's dental, medical or health insurance expenses where the benefit is available to all full-time employees in the same grade of the service on equal terms. Actually, as per the original act, there was missing wordings. All full-time employees in the same grade of the service was not there. Therefore, we had the ambiguity. And second ruling of the Inland Revenue Act has been issued on that as the public ruling to insert the wordings same grade. But with the first amendment of the Act, it has been corrected. Now, whatever the health insurance expenses relevant to the dental or medical, if it is uniform basis applicable for the same level staff, it is exclude. It should be exclude. You can see here, dental, medical or health insurance expenses available to all full-time employees in the same grade of the service on equal terms. Executives having one scenario, managers having different scenario, top level people, directors having different scenario, like that. Same grade people having same coverage. Excluded. Then payments made to benefits accruing to employees on a non-discriminatory basis, that by reason of their size, type and frequency are unreasonable or administratively impracticable for the employer to account for or to allocate to the individuals. Example, meals, uniform. We should not tax them. I know that in some garment factories, they provide lunch. Poultry industry, most of the poultry processing companies provide breakfast and lunch both to their employees because they start their working around 6 o'clock. I think my friend Samanaya can contribute for that. Your group also having poultry processing, no?
Yes.
Since the birds are catching at night time and also transport at night time, companies getting benefits, transport cost, easy to catch, and also no birds are die as a result of dehydration. Those are the benefit. Am I correct?
Yes.
Therefore, as a practice, nighttime transport the birds from the buyback farmers or where the growing houses, and they start the process around 6 o'clock. No, 6 the 7 the Patangan. As per my experience, most of the factories I visited, they start around 6 o'clock. They provide breakfast around 8 to the employees. around 1 or 2, they provide lunch also. After lunch, they can leave the office also. 2 o'clock මට මතක හැටියට. And also they have to work in a cool room. No? Right. And uniform, you know, for example, fuel station. You can take the example fuel station. Right. Then the value of a right or option to acquire shares at the time granted to an employee under an employee share scheme. For example, I can say that telecom, when the telecom converts it as to the private sector, like private sector company, then they issue the shares to the employees to stop their protest. Those kind of things should not be considered as benefit for the employees, since they provide them as benefits to the employees with the agreed period. Okay. ESOP, employee share option plan, sometime given for the agreed period. It may be not the free of charge, sometimes most of the scenarios by making the half payment to 25% or 30% like that. Next one, contribution made by an employer to employees account with a pension, provident or saving fund approved by the Commissioner General. You know, general scenario, it should be approved by the Labor Commissioner General, but for tax purpose, it should be approved by the Commissioner General of Inland Revenue. What are the funds available here? Pension fund, provident fund or saving fund, not the employee trust fund. In a practical scenario, pension funds, as I explained, having some banks and similar organization having pension funds too. You know, we have government provident fund, EPF. In addition to that, we have some other funds. In the university sector, you know, they have university provident fund. In the private sector, there are regulated provident funds. Regulated provident funds. Most of the group of companies having their own regulated provident funds, because they are not going to contribute to the government employee provident fund, because they can use those money for the business purposes of the group if they keep them with the group. Therefore, most of the group of companies maintain their regulated provident fund with the approval of the Labor Commissioner General and Inland Revenue Commissioner General. Right? In a practical scenario, you know, government provident fund contribution from employee 8%, employer 12%, total 20%. But in a private sector, they maintain either 12 and 8 or more than that. In some cases, I know some group of company having 12 and 16. Employee contribute 12, employer contribute 16. Both are contribute additional 4%. Employee also happy because employer contribute additional 4%. At the end of their employment or termination of the employment, they are getting huge amount as the benefit. However, those money used by the group in their investment capacity and they earn the money, therefore they give the interest also for those amount other than the government sector. I think you have that experience than me. Okay, then employment income should be calculated as per the section 10 and 21. No deduction allowed for the employment income. That means gross amount should be taxed, and also applicable basis is cash basis. Cash basis. Since the time is okay, let's stop here because I have to participate for some programs today. Okay. Already time is past, but I have to go there at least to participate. Okay. Any question up to now? Any question or any clarification? Yes? No? Yes? Did you have more comprehensive session today? Yes? No one is talking. I have to ask question from the specialist Samanaya. Because you are participating second time, no?
Yes.
How was the knowledge that you gained than the previous time?
Actually, I think compared to previous time, today I gained a lot of very, very important areas.
Okay.
Especially which I didn't think so important, but when you were teaching, I understood those are also important. That's why I am rejoining.
Yeah. Okay. Because within the programs also we are thinking on that, because especially myself, because since the so many people like you join in the program again to update your knowledge and upgrade your knowledge,
Yes.
then we have to give the much contribution for you. That is why I touch so many areas which I guess that Mr. Atula has not touched. Okay.
Yeah.
Right. If so, let's wind up the session for the day today. Okay. You can go through with the non-cash benefit part and the question itself, because next day we will discuss the question together with this. And I will try my best to share some of the cases relevant to the employment income also. Summary of the cases. And you can go through with the cases if you are interested. Okay. Right. If you don't have any question, then let me wind up the session. Okay.
Okay, sir.
Okay,
Good
sir.
night.
Thank you very much. Good night,
Okay.
sir.
Thanks. Okay. Good night.